Check, check. Mic check. Mic check. Here we go. All right, all right, all right. Good evening, everybody. Uh, Wanted to hop on here because I wasn't able to be here all day and take a look at the day. Wanted to dial down what I saw from today, what I would have liked to have pointed out during the day as well if I was here, and kind of go into where I think the market is going for the next Wednesday, Thursday, and Friday of CPI week. So um, let's go ahead and get into the charts. One thing before I get started here, want to thank the new subscribers and old subscribers as well. Really appreciate you helping me move into this area. Didn't really started this kind of not knowing what would happen here, but I really appreciate all the growth and support that you're giving me. So really appreciate you, subscribers. Thank you so much, and I hope I continue to provide some good value for you. So with that, let's head to the markets. So we want to start on the daily, and as always, if you've been here already, you know my chart's nasty. I do promise I will do from a higher time frame to lower time frame charting from scratch video. I do plan on doing that, so I hear you, and I know it'll be a good video because then you'll understand my chicken scratch here. But so yeah, let's take a look at the daily over this past week. Again, the daily levels are in purple. You see that 1 day there, so kind of prime your eyes to look for the purple lines for the time being. It'll be tough right now, but bear with me, okay? So during this morning's live price action call, you can go back to the beginning of the video. It wasn't very long. Must have been within the first 2 minutes or so. I pointed out, will price go up to here? And what happens? It was at this volume imbalance. Price ends up going all the way up to what? This order block that we see here. And what happens right when it gets there? I mentioned this order block and this old new week opening gap. It rejects there and ends the day. So that is quite telling. So what do I see for tomorrow? So some things that you want to keep on your chart. You want to keep the 50% mark of this candle. I think this candle's high is 15383.50, close enough, you know. So you want to keep this value. Oops. Let's keep it about 15333. And let's remove this first. So this is kind of like a midway point. So we're going to give it a consequent encroachment. Do I have one of those? Yeah. And then what we're going to do is also mention this. We're going to give it a template of just black. And we're going to say 15333, 1 day up wick, consequent encroachment. You can think of it as a 50% point of that wick and that price action there. We will, let me do one thing. I'm going to draw it back a little bit so we see a tiny bit more on the lower time frames. So we'll drop down into lower time frames and then we'll showcase what that looks like. But keep that on your chart for the time being. So what happened today? You know, we filled out the rest of that daily CIVI high. We punched through this inversion fair value gap on the monthly, and we also punched through a previous monthly August down wick. So where did we head towards? We headed towards this bearish order block here, this volume imbalance, and this new week opening gap. So there were a lot of confluences right at that point. Now we do still see we have one daily imbalance up here that has not been touched yet. If we are bearish, I don't want to see this bearish order block traded to and through on a closing basis. It can definitely wick up there. That's permissible, as Michael says, but I think with CPI, it's possible it could wick up there and then head back downwards. That's what the play that I'm looking for right now, because I think that on a higher time frame, I think we're still in a downtrend. We see that we have a intermediate term low broken by another intermediate term low broken, and then we have yet another intermediate term low there, but we've never had intermediate term highs broken yet on the buy side. So that leads me to believe that we can certainly head up there for CPI and then head all the way back down and target these relative equal lows. Maybe not today, but I mean, this is still of interest to me. And considering what's going on right now in the world, I just don't have a lot of catalysts to the upside. But I do think that sorts can be squeezed to the upside for sure. So let's chop down into some of the lower time frames and kind of talk through and see what we see for today. I think the 15-minute is probably a reasonable one. It's probably worthwhile hopping to the hourly too, so you can see what I would have outlined. So let's take a look at today's price action. Okay, so we're gonna elongate these a little bit so you can see a little bit more at one time. So this is today's price action from Asia to London to New York, right? So before New York happened, this is what you would have seen on the hourly. So we would have seen buy side taken right there, still marked it through. Then we see sell side taken midway through. Now, if that happens, what are we expecting would happen? Well, either we would expect to see further downside into this gap here. It's a pretty big one, right? Or if it's not strong enough to do that, and we're setting up for some wicked late week shorts, then it's going to probably head back upwards and take out this buy side liquidity, which it ends up doing there. Let's drop down to the 15-minute to see a little bit more. Okay. So here's the 15-minute. You can kind of see the areas of liquidity a little bit better here. I actually meant to put this here. So we do see that this liquidity got taken once, twice, right before the morning starts off, and then the morning New York opens up, or rather New York open kill zone opens up 7 o'clock in the morning, and we trade down into this area of liquidity. We trade down into that volume imbalance, and it respects that volume imbalance. So we have wick, body close, wick, 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 and then all of a sudden we open and we head upwards, right? So something that's key outside of just sheer liquidity points, and I have to go down to the 5-minute to show you. Okay, so we see that this is the price action for today, right? So we see a low, high, that took out an area of liquidity here. Low, high, lower low. This also took out an area of liquidity. That's key. So that is very, very important for you to notice that. When you're trading, if it's almost New York open, you would have seen that, hey, we've taken out buy side liquidity a couple times and haven't punched through. So we have relative equal highs now. And then we have one area of liquidity, London, and we took that out. And now we're respecting that volume imbalance. You can see the bodies of these candles continue to inch upwards. So now, what do you have forming? You see retesting that same thing, and right there, you see a change in distribution. So price can no longer stop well below that, as you can see by the wicks. And all of a sudden, we see the 10 o'clock movement here. What does that form? From this to this, we have a fair value gap. So we have, and this is where we have high probability breaker, unicorn breakers is what we call it. So we have buy side liquidity taken, low, high, lower, low, higher high, swept. So we expect for it to come down to here at least. We anticipate that it's coming up to this range of a breaker. And what do we see in the coming candles? If you had a limit order set at the low here, 15,240, you would have revisited that right there, gone in. You can see it touches the very top of that breaker, immediately rebalances upwards, and then within 10 minutes, you're up 30 points. Within 15 minutes, still up 30 points. 20 minutes, you're now up from 40 to 90, 50 points. 25 minutes, you're now up 60 points, almost 70 points. And within half an hour, yeah, about 70 points. And if you are following liquidity, you notice that we, on the higher time frames, we would have had the sell side imbalance on the weekly to be a draw on liquidity. Now, remember, during the pre-market analysis, I pointed out that there's a bearish order block here on the higher time frame, as well as a new week opening gap. So there are a lot of confluences in this area. So it was likely that we start to see some level of consolidation or reversal. So here we see our first mini market shift there. And what we end up doing is see some consolidation, and eventually we break way, way, way down during the Fed speaker. So could you have prepared for that? Very difficult to. If we go down to the 1 minute. Okay. So this is the 1 minute. And let's take a look at this here, right? So you're watching this on a 1 minute chart. You see, this is maybe the closest that you see to filling in any sort of implied fair value gap there. But here, you see this low, boom, 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 and price eventually heads back up here, stops some people out, and I think it goes up once more. Let me see if it goes up once more or not. It doesn't. So basically that fair value gap is your 2022 model right there. And that's on your 1 minute chart. You can see the bodies of the candles respect that. You would have had to endure, assuming you got in at the high or midpoint here. Let's see, 15,371. The high here is 15,373. So you wouldn't have had to endure too much, 15,374. So not a ton of drawdown when you saw that market structure shift after a couple of higher time frame levels began to be taken. So that was your cue to go short, and of course that continues all the way back down over to our monthly values there. So we can also see that when we saw our breaker here, oops. So we see our breaker there as well. A little easier to see on the 1 minute, but so we have a high, low, higher high, back to the breaker, and then off to the races. So those type of setups are some of the best setups that you can look for, especially if you know that there's really key liquidity above you that we haven't touched yet, and that we're trending in that direction. So really, really great day to take those two trades. That's about it for what I see. So let's go to the daily for what I see for tomorrow, what I'm thinking for tomorrow. So tomorrow, we know that there is a couple of things that we need to be watching out for. 4:15 a.m. We're not going to be awake for that, but if you are, watch out for that. 8:30 in the morning, core PPI. That's going to cause a little bit of ruckus there. And then following very closely, 10:15 a.m., the FOMC member Waller is going to speak, and 2 o'clock FOMC minutes. Now, while FOMC minutes isn't nearly as bad as FOMC in terms of volatility, it can still cause some volatility. So be careful during those times, especially during FOMC speaker times. It is not worth you risking an insane amount and trying to blow your account. So one thing I want to point out though is that if you have the luxury of looking at lower time frames, at the very top there, once it hit the old new week opening gap, you see it head down here. There's no real market structure shift on the 5-second, but we do see some displacement further down here. There's just no, if it doesn't come up here, then there's a very good chance that it won't come up there. And we do see that this short-term high eventually gets a few shorts to get stopped out, takes those highs, and then finishes off, creates a fair value gap, allows for people to enter. And even then, even if you had entered around here, you probably would have gotten stopped out if it went above this high. But you can re-enter here as it had respected that quite well. So that's one consideration. If you have the ability to do lower time frames, you can keep an eye on that, but you don't need to by any means. So for tomorrow, I think we've already taken the buy side liquidity areas that we need to. Again, I am looking to that consequent encroachment here. What do we do when we head up to there? Do we reject it? I would like to see it reject, and then maybe like pull back a little bit. I certainly do not, as a macro bear, I certainly do not want to. Oops, what happened here? I do not want it to trade up into here and close. So if it does that, that would mean it's closing above a bearish array, a PD array, and that doesn't bode well for shorts, because then you start having, you see there's already a little mini structure shift for the short term here. So if it goes above that point, then we start to see a little bit more resilience on the buy side. So but if it does go above there and close this midpoint, if it does go above that midpoint and close, then you can kind of treat the new week opening gap as a springing off point, and then eventually you get above this bearish order block, and then you head towards this one. You get above that one, then you head towards the other one. So I'm still looking for opportunities to short, given the macroeconomic, nature of what's going on. So that wick is going to be important to me. I want to see what happens over Asia. I want to see if we have the gumption to go through that. If you look on the 60-minute, there's a large fair value gap which is formed now. So we put that here, that there. Kind of see that this reaches out to a SIB perspective. So we kind of see how that on the 60-minute, we've now created a sell side imbalance, buy side inefficiency. So I'm thinking that upswing's consequent encroachment on the daily is also this SIB's midpoint. I would not mind seeing it trade up to that midpoint. I would want it to fail afterwards though. So let's see if we complete a lower low here, and then continue lower to take out even this low. That's what I'm hoping for tomorrow. I don't know if it'll happen, but that's what I'm looking for rather. And I think it was, trying to see where I can find it. Yeah, I mean, really, considering that it would be Wednesday, I'd be looking for the high of the week forming, given the nature of where we've traded since the morning. And maybe it just keeps on going up too. I mean, it would be very interesting. I would have to shift my sentiment at that point in time if we made a higher high, but keep in mind, we haven't done that yet in the whole macro bearish, swing that we are in right now. We haven't made a significant intermediate term high. We haven't seen it close above that. So as long as we don't see that, I should be okay to keep my bearish stance. So yeah, I think that's it. I mean, you do see the breaker here a little more clearer, low, high, lower, low, high displacement, and then drop down. So, but we do see that in Asia could certainly, drop down and then take some more sell side and then just keep on rising up. So I am gonna see what Wednesday provides. As always, I'm gonna be risking down. I'm gonna start to trade copy some of the accounts, I think. Not gonna go huge, but the final 2 out of 20 total performance accounts are passing tonight, and so I have no reason to buy any more evaluation accounts. I have all I need, so it's going to turn into very slow, methodical growth on these accounts. I'm not going to paper trade more than, or I'm not going to copy trade more than 4 accounts at a time, and it'll be slow, but it'll be incremental progress. And I want to show over the course of time how I'm able to control risk. So that is the goal, and that is it for tonight. I hope you found this to be a interesting, at least an interesting review. We're gonna actually remove all of these untouched items now because we've already covered them. And yeah, I think that is it. We've basically touched every single one of these. Even this one we've touched as well. So we want to see that daily imbalance stay put, right? Now, we do see that there's boom, boom, boom. We notice that there were relative equal highs up here with at fair value gap right above, right? So I'm willing to accept it going up to there, but if we go too much further above, it's going to be, it's going to have to start thinking about whether or not we've shifted sentiment or not. So, okay. So again, for tomorrow, I expect the tie to be made on, if not Tuesday, then Wednesday. Or the low of the week having been made by Tuesday or Wednesday, and then we can determine if we're going to continue going, or if just maybe Wednesday we go above and Thursday we knock out some of the buy side liquidity and to head downwards. I guess we'll find out. So great. So I think that's it. I'm going to go head off to begin some studies. Still study in the evening. So wanted to thank you for those who have subscribed and started to watch the Apex review video for strategy. Again, let me know if you have any questions. I know I didn't go into individual strategies, but that is something that I made this channel with the assumption that you're going to go to Inner Circle Trader, learn that and learn that alone, or find your favorite guru and go learn from them. Get your strategy first if you're a newbie, but I'm gonna do some studying tonight and stay disciplined. So yep, I will catch up with you bright and early tomorrow, and let's have some good trades. Okay, have a great evening, everybody. We'll talk soon. Have a good night.